With us now for further analysis, we are joined on the set by Joseph Grinkorn, CEO and Chairman of the Morris Group, and also Neve Ellis of the Jerusalem Post. Thank you both very much for being with us.
Thanks for having us.
Well, let's talk about these ECB moves. Does this confirm its pessimism on the European economy, Neve?
You know, it's more than a confirmation; it's a reaction, right? They lowered their estimate for how quickly the European economy is going to grow from 1.7% to 1.4% this year. That's not very fast growth, and this is still, a continent that's dealing with the aftermath of this global financial crisis. So these aggressive moves are not just an acknowledgement of that, but really part of the last-ditch effort to counter it. There's only so much that can be done from the monetary side, and it looks like the ECB now said, we're going to do everything that we can.
So this is, in fact, a more aggressive stance here to try to reinvigorate the economy. Joseph, let's go to you here. Some analysts said that these moves surpass the expectations. Do you think that they will be enough to actually bring inflation to that 2% target?
Honestly, I don't think it's going to work. I mean, I think it's more of a real desperate move by Draghi. I mean, he started off doing, $40 billion of QE. Now he's doubled that in a very, very short time. So I don't think it's going to work long term. Short term, yes. I don't think it's going to work in the long term, though.
Well, one other thing that really caught investors off guard was this announcement by the ECB that, in fact, they would expand their QE stimulus program and, in fact, buy non-bank corporate bonds. How does that impact the market? Is that distorting it, and how have the companies reacted?
I mean, the whole idea is to distort the market, right? And to say, okay, we're going to extend a lot more credit to these corporations to make it much easier for them to get credit to sell off their bonds and to extend them credit so that they can do more business. I mean, this is really the fundamental idea of quantitative easing, is to really stimulate these companies into growing the economy. And you're not going to get higher inflation until you get companies like that getting out there and doing more business.
And something interesting that we have actually been seeing for quite a while, though, is this divergence between the U.S. Federal Reserve and the ECB in Europe, taking two different approaches here. We just saw the Fed hike interest rates for the first time in many, many years, and yet we're seeing the ECB taking the opposite approach. So what explains this divergence?
Well, I think because, Europe is really like in a double-dip recession. It's never really gotten out of it. Maybe Mario Draghi is a little bit late to the game in the sense with the QE and actually with the negative rates. So I think it's a last move to be really, really aggressive to try to turn this around quickly. I don't think it's going to work. And again, you're talking about buying all different kinds of bonds of companies really that are questionable, on their long-term stability, so to speak. So I don't think it's going to work short term. I think it's very positive for the market. I don't think it's going to help inflation at all too much. And we'll just see how the GDP does, like in the very, very near future.
But why did this move really catch investors and analysts by surprise?
Well, I think that, the European Central Bank has not been known for being very aggressive. Mario Draghi has a couple of times come out and surprised people and shown his commitment. But this move was really, firing on all fronts, lowering the interest rate, expanding quantitative easing, opening up new programs, new lending programs for banks. So this was really just sort of an across-the-board aggressive move, not sort of the incremental way that we're used to seeing the ECB function.
Interesting. And how does he compare to his predecessor, Trichet?
Really has a different approach. I mean, he's really going out, he's really all guns are firing right now. Just like you said earlier, he's really going extremely, very aggressive right now. And ready, for the banks, it's a very difficult, very, very problematic environment as is right now. So you're talking about putting negative rates on the bank, and you're encouraging them to lend, and it's not really working so much. So we'll have to see how it works in the short term.
All right. Well, thank you both so much for being with us. Do very much appreciate it. Neve Ellis of the Jerusalem Post and Joseph Grinkorn all the way from New York City.